All right, welcome back. Today we are diving deep into a really fascinating company that's been making some serious waves in the biopharma world, ADMA Biologics. It's one of those stories about a specialized niche company that is just transforming into an absolute profit powerhouse. And yeah, the market is definitely starting to pay attention. So let's get right into it.
And let's just start with the number that's making everyone's head turn, 76%. According to analysts, there's a potential upside of over 76% for this stock within the next 12 months. Now, that's a huge number, right? So in this explainer, we're going to unpack exactly what is behind that massive forecast. So, yeah, that really brings us to the main question, doesn't it? How does a company that focuses on a super specific part of medicine suddenly hit this kind of incredible growth? Well, I can tell you it's not magic. It really comes down to a powerful business model and, frankly, some flawless execution. Let's break down how they did it.
Okay, first things first, we have to understand the core of their business and what makes it so incredibly tough for anyone else to compete. I really like this phrase for it, the plasma factory moat, because you'll see it perfectly captures their unique competitive advantage. So at its very core, ADMA works with one of the most fundamental building blocks of life, human plasma. They take this raw material and they turn it into these highly specialized, life-saving treatments. We're talking about therapies for patients who have compromised immune systems. It is an absolutely critical, essential field of medicine. The main product here is something called immune globulin, or IG for short. The easiest way to think about it is like a super concentrated dose of the human body's own defense system. So, for people whose bodies just can't make enough antibodies on their own, these treatments, well, they aren't just nice to have. They are absolutely essential for survival. And that is what creates this consistent, lifelong demand for what ADMA makes. And this is where it gets really brilliant. This is how they do it. ADMA controls the entire process, from start to finish. See, they're not just buying plasma from some third-party supplier. No, they own the collection centers. They have their own special testing methods, their own FDA-approved factories, and they deliver the final product. This vertical integration, it's a game changer. It gives them this incredible control over quality, costs, and maybe most importantly, their supply chain. So what does all that control give them? It creates this incredibly powerful moat around their business, a barrier that keeps competitors out. Let's break it down into 3 pillars. First, the regulatory moat. Getting FDA approval for this stuff is unbelievably hard and takes forever. That's a huge wall for any newcomers. Second, that supply chain control we just talked about. It just makes them way more efficient. And third, their own unique technology gives them a real edge in quality.
Okay, a great business model sounds good, but you gotta ask, does it actually make money? Let's move on and see how this all translates into financial performance, because the answer here is a huge, resounding yes. The proof, as they say, is in the profits.
Just take a look at these numbers from Q2. Wow. Okay, revenue is growing at a really solid 14%, but that's not the main story. The real story is the profitability. Adjusted EBITDA, which is a great way to look at operational profit, is up a staggering 59% from last year. And the company is now solidly profitable, even by the strictest accounting standards. That is a massive milestone for any biotech company. This chart, this is what analysts are talking about when they say operating leverage. It sounds complicated, but it's a really simple idea. As the company makes more stuff, the cost to make each individual thing goes down. For ADMA, as they get more efficient, their costs are dropping and their profits are just exploding. This chart shows you that explosion visually. And that brings us to a really crucial point. We have to reframe how we think about this company. For years, ADMA was probably seen as just another speculative biotech, burning through cash, hoping for a home run someday. Well, that era is officially over. The numbers don't lie. They are now a proven, high-growth, and highly profitable business.
And you can tell management knows it because their confidence is just soaring. They've actually raised their financial forecasts for the entire year. Let me tell you, when a company's leadership comes out and tells the market, hey, we think we're going to do even better than we thought, that is one of the strongest positive signals an investor can get.
Okay, but a smart analysis is never just a one-sided story. So let's take a breath, balance this incredible growth story, and take a clear-eyed look at the potential risks, and of course, what the analysts are actually predicting for the stock price. So let's look at both sides of the coin.
On the left, you've got the powerful strengths, that amazing operating leverage we just saw, and a price-to-earnings ratio that honestly seems pretty low for a company growing this fast. But on the right, you have to consider the risks. Their success is very concentrated in this one market. The stock itself is naturally more volatile than the average company, and their entire business model depends on a steady supply of people donating plasma. These are real things to keep in mind.
So, keeping that volatility in mind, what are the key price levels to watch? Well, according to the technical analysis in our source material, the $14 mark is seen as a major floor, a big area of support. So, for investors who really believe in the long-term fundamentals, a dip down to that level might be seen as a pretty attractive buying opportunity.
And what about the upside? Well, the average 12-month price target from the analysts who cover this stock is sitting right around $27.25. And there you have it. Now you see where that 76% potential upside number comes from. The pros think there's a big gap between where the stock is trading today and what it's actually worth.
So let's put this all together now. After looking at the business, the numbers, the risks, what is the final investment thesis for ADMA Biologics? I love this quote from the analysis because it's such fantastic advice and it's really worth repeating. In a shaky market, it's so easy to get freaked out by the daily ups and downs of a stock price. But the core strategy here seems to be ignore the noise, focus on the engine of the business. And that engine, the actual profits, is absolutely roaring right now.
So, if you're going to remember just a few things from this, let it be these. First, ADMI's business is protected by a really powerful moat built on regulations and their control of the supply chain. Second, the company has officially made the leap to being highly profitable and growing fast. And third, even with the stock's volatility, the experts think it has a significant runway to go higher.
And that leaves us with this one big final thought to chew on. You have a company here with a defensible business, rock-solid fundamentals, and profits that are picking up speed. So when the market gets scared or shows volatility in a stock like this, is that really a danger sign? Or is the market just handing you an opportunity? That's the real question at the heart of the whole ADMA story.